Welcome to today's property investment analysis. We will be exploring if this £9.5 million retail park is a smart investment. As a chartered surveyor, these are the points that jump out at me. The property is a modern purpose-built retail park constructed in 2015, let to Sofology and TK Maxx X. The site also includes a Costa Pod unit, a Greggs, Burger King, and an 8-bay electric vehicle charging point. Let's dive into the positives. Cannock is an accessible location with good links from the M6 motorway and M6 toll road. The area also benefits from a fair amount of inward travel, given the location is known for Cannock Chase, a 3,000-hectare area of outstanding natural beauty. The site itself is very prominent and sits along the A5 and A460 road. The majority of the site is visible from the road, and these junctions get a lot of through traffic. The locality is well known for out-of-town shopping with nearby stores, including Marks and Spencer's, The Range, and a large Sainsbury's. There has also been a prominent outlet village developed by MacArthur Glen in the past few years, which will be drawing more inward travel to Cannock from surrounding areas. There is a lack of good quality immediate competition. Town centre competition would normally be a slight concern for retail parks. However, Cannock Town Centre is fairly basic, and this is a positive for the park. There is another park along the A5, however the orbital area, where the subject is, would be superior. Externally, the units are of modern design and present well. The food and drink offering on the site will increase customer linger time, which is a major benefit to retailers. Both of the retail warehouses appear to be adequately tall enough to provide mezzanine installations should the tenants need them. This can be a big plus to future occupiers. It appears that TK Maxx has taken advantage of this and trade across 2 floors. When installed by the landlord, this additional retail floor space can result in additional rent. There is an open retail consent for the park, which is not limited to bulky goods. This provides maximum flexibility when letting vacant units if any tenants were to leave. This means you could consider fashion tenants, home goods companies, and discount retailers, specifically looking at the drive-through pods. This park is ideal for them as they seek busy junctions with large surrounding suburbs, of which this site ticks both boxes. The slight drawback is the car parking provision. Furthermore, there are surrounding parks which would assist in attracting customers to the location. Another plus is the high-speed electric vehicle charging bays. This is good if you want to have an environmental angle within your investment portfolio. It also means those with electric vehicles nearby would visit the property and remain on site for around 30 minutes. Looking at the tenancy schedule, there are no immediately lease expiries that would worry me, and there are no break clauses mentioned, which is very positive. The income is relatively secure in the short term. There are lots of rent reviews to consider in 2025. TK Maxx, Costa, Burger King, and the electric vehicle car charging points all have some form of review mechanism, which guarantee the rent will increase, whether set fixed increases or increases linked to the retail price index, so these rents will rise next year and increase your cash flow. However, the reviews for Sofology and Greggs in 2026 are open market reviews, and I do not think the Sofology rent is likely to increase. That said, it is quite likely the rent Greggs pay could be reviewed to higher rent. You will need professional lease advice in order to achieve uplifts at review. In terms of the tenants on site, TK Maxx are very strong covenant with high turnover, good levels of profit, and a well-established brand. Sociology have similarly been around for a long time and have a good brand. Costa Limited have grown exponentially in the UK and are now owned by Coca-Cola, so no real concerns there either. Let's explore the risks. Cannock is a fairly sparsely populated town with average affluence when compared with similar locations in the region. This is underpinned by relatively modest house prices. Therefore, customers are less likely to be at the premium end of the consumer scale. Parking on site seems to be sufficient, however I could see this getting quite congested at peak times. It is probably safe to assume the Costa and Greggs units have been built on land formerly used as parking. This park does not serve as a regional attraction as the dominant park. For this area would be Gallagher Retail Park in Wednesbury, which is a significantly better park when compared with Cannock. Tamworth to the east and Wolverhampton to the southwest also have large retail parks that will draw custom away from Cannock. One thing to point out is the unit trading as Burger King. The lease is not actually let to Burger King and is a franchisee business called Caspian Food Services Limited. I wouldn't be too concerned about this, as this is fairly typical for Burger King drive-through units. The accounts for this tenant are patchy and not fully up to date, so one to keep an eye on when pricing in some risk to your bid. The major thing that jumps out at me on the tenancy schedule is 4 out of 5 tenants' leases expire in 2030, whilst not an immediate concern. I would seek to deal with this sooner rather than later, as losing 4 out of 5 tenants in 1 year would be catastrophic for your income return, although unlikely to happen. Finally, the covenant for the electric car charging company does not appear to be very good. However, I anticipate that it is worth the risk given that those car parking spaces would not generate any explicit income anyway. These companies are likely suffering from high setup costs and may improve in the future. This property is available for £9.5 million, which reflects a net initial yield of 7.50%. Given the rent reviews next year, many of which are guaranteed to go up by RPI, this seems a good price. There is encouraging investor competition in the retail warehouse market, and pricing may start to improve towards the end of the year. I would be happy at around asking price for this asset. Thank you for joining us in this property investment analysis. Get in touch with suggestions for future videos, and links to the investment are in the description. For more insights and detailed property evaluations, don't forget to subscribe and hit the bell icon for notifications. This has been the Secret Surveyor, unlocking property investment secrets.